Hello, my name is Kristi Blake. I work at House CPAs. I'm an enrolled agent and tax preparer.
Hi, I'm Megan Heiser with Burt Taus CPAs, a wholly owned subsidiary of Burt & Company. I'm here with my colleague, Kristi Blake, and we're here to give you our top 5 tax tips for 2020.
Number one, unemployment benefits. They are taxable. So, a reminder for all of you that received unemployment benefits during 2020, this is considered taxable income. You should be prepared for a potential tax liability when you file your tax return for 2020 and 2021. If you're used to getting a large refund or a refund, you may not get that refund this year. We are here to help you do any tax planning in that case if you did receive unemployment and you want to find out if you're going to be owing tax.
So, your taxable income situation may look a little bit different this year than it has in prior years. If you're used to receiving a refund at the end of the year, it's possible that you may have a small liability to pay in. If you're used to paying in a bit, you may have to pay in a bit more. Charitable contributions. You can have your retirement plan pay a charitable organization directly for any contribution you'd like to make. If you do this, this will not be considered taxable income to you. It will also not be an itemized deduction on your Schedule A, but it will be removed from your taxable income. The key here is to have your retirement plan pay the organization directly. You don't want that money to pass through your hands. If the retirement plan pays you and then you pay the organization, it will be included in your taxable income and it will be an itemized deduction on your Schedule A, which you may or may not qualify for.
Now, doing this helps keep your adjusted gross income down to where you can use other items that are based on your adjusted gross income, your AGI. Itemized deductions, taxable Social Security benefits, all that stuff is based on your AGI. So you want to try to keep your AGI down if possible. So making those charitable contributions directly from your retirement accounts definitely helps. Number three, your medical expenses. Medical expenses are an itemized deduction if it exceeds a certain amount of your adjusted gross income. They're another reason to keep your adjusted gross income down. Keep good records for your medical expenses. A lot of us that live in small communities travel to bigger cities for medical reasons and medical treatments. Mileage to and from those cities for your medical appointments is a medical expense.
The other tip with medical is that if you haven't saved your receipts and haven't kept track of your doctor's office visits and your medications that you've purchased throughout the year, you can go to your pharmacist, your doctor, your dentist, your eye doctor. Any of those providers will be able to give you a list of your annual expenses. That way you don't have to go digging through your receipts. Retirement accounts and early distributions. If you are under the age of 59 and a half, you can take a withdrawal from your retirement account in 2020 and avoid the 10% early withdrawal penalty. This is due to the CARES Act, and it's just good to know that if you need cash on hand, 2020 is a year where you can avoid that 10% penalty. It will be included in your taxable income, so do be aware of that, but you'll avoid that penalty that's normally there.
If you have had a family that was infected with COVID or you yourself was infected with COVID, you have 3 years to pay the tax on that distribution, or you have 3 years to pay it back, whichever is better. So that's also part of the CARES Act, and you can call our office for any questions. Review your capital gains and your capital losses at the end of the year. If you have a capital loss carryover from prior years, you want to use that up if you have something you can sell and take a gain on it at the end of the year. So you might want to consider selling some kind of a stock or a portion of a stock or bond, anything that would create a capital gain. If you're not sure if you have a capital loss carryover, you can call the office and Megan or I can help you determine if you have a capital loss carryover that you can use. That's a really good year-end planning item to take any gains or losses to offset each other.
So let's say you have a capital loss carry forward of $10,000. And in 2020, you decide to sell some stock and you have a capital gain of 10,000 on that sale. We can net those together, making that transaction be zero as far as taxable income goes. So, if you don't know if you have a capital loss carry forward and you're a client of ours, you can always call us and we can look at your prior year tax return and let you know. If you're not a client of ours, you can reach out to the person you are working with. They should have that information handy. Or you can simply look at last year's tax return, and any carry forwards you have should be listed there.
So, those are your top 5 things to look at before the end of the year. Please call our office to discuss any planning. We will be here during the month of January for your tax planning needs. We're not going anywhere this year, no traveling.
Thank you so much for taking the time to listen to us today. If you've listened to this video and you have any questions, feel free to call us at
575
575
758
758
3964.
3964.
Thank you.
We're
Happy New
here and we're
Year.
happy to help.